Welcome, everyone. I know we're going to have several that are continuing to join us as we get started here, but welcome to our legislators and their staff that are joining us today for our webinar that's focused on you to talk about Virginia tax conformity. We know that this is a very confusing topic, and there's been a lot of movement at the federal level over this past year. And with the session right around the corner, we thought this was a good opportunity to introduce you to this concept or review it for those of you who are familiar with it, and give you a chance to ask some questions of CPAs who are far more expertise in this topic than I am. So for any of you that I haven't met, I'm Emily Walker. I'm the Vice President of Advocacy with the Virginia Society of CPAs. And I am joined today by three members of our Tax Advisory Committee. We have Chris Thomas, who's a member of the committee, Sarah Adams, who is our Vice Chair of the committee, and Vivian Page, who is this year's Chair of the Tax Advisory Committee. I'm going to ask that all of you go ahead and mute yourselves for this first portion. And if you have questions as we're going, please feel free to put them into the chat, and I'll monitor that and interrupt our speakers if needed. And then we'll have some time at the end for some additional Q&A. So with that, I'm going to turn things over to Vivian to get us started.
Good afternoon, everybody. I'm so glad to see so many folks be able to join us today. I'd like to start out with just giving you a little bit of background on our tax conformity and what the VSCPA thinks about as a part of our guiding principle. And we have it there on the screen for you to see that we would really like to see that Virginia tax laws conform to federal laws and that there is no delay in doing so. So as we look at, and you can go to the next slide, Emily. As we look at what tax conformity really is, then what it really boils down to is that Virginia adopts the federal definitions of income. It doesn't adopt anything related to the tax brackets, exemption amounts, deduction amounts, credits. It doesn't do any of that. What it's doing is looking directly at what is considered to be income. And for individuals, we start with federal adjusted gross income. And we'll talk in a second about what these two definitions are. So federal adjusted gross income for individuals, businesses start with federal taxable income. And every year, the General Assembly takes up legislation to conform to the tax laws, the federal tax laws. And when they conform, currently we have a conformity date of December 31st of 2019. And of course, one of the things that Virginia does do is doesn't conform completely with federal law after they consider what the impacts are going to be on the budget. So there are several exceptions that are in the code currently, and we'll talk about those. So Sarah, I'll turn it over to you now to talk about those definitions.
Thank you, Vivian. As Vivian mentioned, on the individual side, we start with federal adjusted gross income. Most of you are probably familiar with your federal tax return, but in case you've not really looked at it, you're looking at income, different types of income of, say, W-2 income, interest and dividends, self-employment income from sole proprietorships and farms, rental income, Social Security and pension income, and various different incomes from being an owner of a pass-through entity like a S corporation and partnership. And then you've got deductions that bring you down to adjusted gross income. And these don't have anything to do with itemized deductions. These are deductions that are before AGI. And that's self-employment tax, things like self-employed health insurance, other contributions for IRAs and pensions, HSA contributions, and some other deductions that are allowed for to get down to federal adjusted gross income. Next slide, Emily. And then on the business side, if you think of the business profit and loss statement, revenues minus expenses, that gets you down to your book income on the business side. But then even to get down to federal taxable income, you've got many different tax adjustments, things like 50% meals and different depreciation adjustments and things like that. So you do have some differences between your book and your federal taxable income. Next slide. Currently, as Vivian mentioned, our conformity is through 12/31/2019. We currently have some deconforming provisions, even at that point. Bonus depreciation, NOL carrybacks, debt cancellation, medical expenses, the difference between the 7.5% and the 10% floor, the P's limitation, which is a difference between total itemized deductions and the 3%, or actually in Virginia, there's an indexed P's limitation. So we've got some complexity already in the provisions up through 12/31/2019. Actually, if you look at the Virginia instructions, there's over 50 some different potential adjustments that we could be making for Virginia tax returns that are different from federal AGI or federal taxable income. So we've already got some layers of complexity there. And I'll turn this over now to Chris.
Thanks, Sarah. So as Sarah is saying, we do have some levels of complexity kind of currently baked into our compliance process and filing these tax returns. And I think what's really important about this year, especially, is not only do you have these historical complexities, but as you can see from the slide, we've had multiple kind of federal changes to the tax code, including the CARES Act back in March and then the Appropriations Act just after Christmas, that further complicate the computation of your Virginia tax return for both businesses and individuals. So as you can see here from the slide, just a quick timeline, right? We have this conformity of as of 12/30/19, we had those two acts. So to really, unless we have a conformity relatively close to 12/31/20, which is the proposed date, that fourth little dot there, taxpayers will have to go back in time, effectively recompute the federal taxable income amounts that Sarah kind of walked through, the federal adjusted gross income amount and the federal taxable income amount for businesses, not considering the CARES Act and the Appropriations Act, and then layer on the historical adjustments that Sarah also just walked through. So it's, and I'll say too, the CARES Act and the Appropriations Act both had some significant tax computational changes in them that have to be considered. So if we go to the next slide, I think this is just, again, a quick 12/31/19, just highlighting that again. And the next slide as well, the CARES Act appropriations. And then maybe the next slide's a good one too, where, so this is the CARES Act by itself, that we have changes to the retirement distributions, NOLs, interest limitations, and again, kind of the QIP bonus depreciation. So again, this is just the CARES Act, and these are just federal changes that would affect that starting point back to 12/31/19. And then we go to the next slide, the appropriations. Again, they had some changes as well, additional changes for the business side. So I think that, again, those are just 12/31/19 to 12/30/20 federal changes that have been passed by Congress in this past year that would need to be considered on top of any of the additional state-only changes that Sarah walked us through. Vivian, do you want to maybe take us through the next couple slides?
So I just wanted to point out this, we expanded this timeline so that you could get a sense of what happens once we get to past the start of the session. So the session starts, members are scheduled to start on the 13th, which is just 2 days away. And then you can see almost immediately, just a couple of months later, we're dealing with the fact that income tax returns are due for businesses sometime in March, some in March, some in April. Individual returns are then due on May the 1st. And I want to point out to you something on this slide that I'll refer to later, and that is that generally speaking, laws that are passed by the legislators, and I'm sure you all already know this, go into effect on July 1st, which is well beyond the filing deadlines that we have for individuals and businesses in Virginia. So take taking into consideration, and you can go ahead and go to the next slide, Emily. Taking that into consideration, historically, we have passed emergency, you all have passed emergency legislation in order for it to take effect in time for our taxpayers in Virginia to be able to file their tax returns timely. And so when you take that, when you roll, what we're looking at is rolling forward that conformity date from December 31st of 19 to December 31st of 20, taking those things into consideration. 2 bills dropped over the weekend, one on the House side and one on the Senate side, that actually are our typical annual conformity bills that come in for us to be able to, for you all to be able to take on emergency legislation. As you know, emergency legislation requires 80% approval vote in both each chamber. And without the emergency clause, then the bills won't take effect until July 1st, which is well after those due dates for the tax returns. Next slide, Emily. So one of our principles with the VSCPA is one of simplicity. And part of what we'd like to see is to have the legislature pass conformity as early as possible so that we don't end up in a situation which Chris alluded to, where we lack conformity with federal law. So part of that process means that if you all don't pass conformity, go to the next slide, Emily. If conformity is not passed at all, then we're essentially talking about taxpayers in Virginia having to essentially complete 2 tax returns. One that uses the federal definitions as they existed on December 31st of 2019, which is our existing conformity date, and then one that uses the new one. So you've got 2 different federal law dates that are in here. And so without conformity, you've added significant complexity to the preparation of Virginia income tax returns, which is one of those principles of simplicity that is very important to us. The other issue is what happens, and if you can go to the next slide, Emily, what happens if for some reason we don't end up with timely passage? In other words, we don't get that emergency legislation that it actually does pass, but it passes as a regular bill. Well, a regular bill, as you know, means July 1 is the effective date. So what do we do with the fact that we have tax returns that are due before then? Well, a couple of things can happen. One is folks may decide, well, I'm going to wait until July 1, which of course puts everything into the next fiscal year, which creates dollar problems for Virginia. We've got to deal with the fact that software companies, Virginia Department of Taxation is going to actually have to figure out how they're going to manage the receipt of tax returns prior to the effective date of the law. So it was very, very important for us to think about how we could possibly do this. And so if I can make one pitch, it is that passing the bills that we have before us with an emergency piece in there, that becomes very important, so that taxpayers in Virginia are given some certainty and are able to file their tax returns. That actually takes us to your questions.
Emily, I have a question.
Sure. Go ahead, Delegate McNamara.
So when I looked at the static conformity bill from Senator Howe, it appears, since it doesn't exclude the forgiveness of Paycheck Protection Program loans, it appears as though that would be conforming to the federal exclusion of that income. But I noticed on the governor's budget, he only has $41 million in for conformity costs, which I don't know that would include the Paycheck Protection Program loan forgiveness of forgiven debt. Do you have an idea, or could you clarify that for me?
I would love to be able to clarify that for you, Dr. McNamara. I'm still waiting for those numbers as you are. I agree with your assessment that as currently drafted, it would pick up those changes because we're looking at a conformity date of 12/31/20. And of course, that legislation was signed on December 27th. So it would be picked up. I know that they are currently analyzing it to figure out what the fiscal impact is. And so I'm told that it could be significant. I've also heard through my colleagues in other states that have a similar position to mine that it's a tricky area to figure out how to compute though, because they're funds that weren't really contemplated to begin with. So I think there's probably some question as to whether it's actually a fiscal impact or not. But I think that's debatable depending on your perspective.
Well, I understand exactly what you're saying. Actually, the Paycheck Protection Program loan I put in, they did not put a fiscal impact on it, which I thought was kind of interesting the way because I guess because it's not included in the budget to begin with.
Mm-hmm.
Thank you.
You're welcome. Any other questions?
Yeah, Emily, what were the bill numbers for Watts and Howell again? I didn't write that down when you first gave that.
Sure. Let's oh,
There they are.
there they are. So it's House Bill 1935 is Delegate Watts' bill, and Senate Bill 1146 is Senator Howell's bill.
Got it. Thank you very much.
And we will send out a copy of this slide deck for everyone, in addition to the recording of this program. And we also have another one pager that we can send you and follow up as well.
Okay, that's all I have.
Okay. Other questions from anybody in our audience? All right. Well, seeing and hearing none, we do appreciate your time today, and we genuinely hope that this has been helpful for you in terms of being able to understand what this issue is and why it's important to the tax practitioners and the taxpayers here in Virginia. And just a reminder that, there's about 27,000 CPAs in the state of Virginia. About half of those are members of the VSCPA. So we are here as a resource to you. From our perspective, the most important thing is that this issue get addressed timely. We certainly understand that there are significant fiscal impacts to some of these changes, and your job as legislators is to make sure that the Commonwealth is appropriately funded. And so we can't always pick up all of these changes. So clarity becomes the most important thing at that point in time. All right. Well, with that, thank you again for your time. And we hope this has been helpful.